Good morning, everyone, and thanks for joining us. Ivan, can you hear me all right? Are you online?
I am, and it's afternoon.
All right, any advice contained in today's trade group discussion is general only. It doesn't take into consideration your personal circumstances, and you need to decide for yourself whether it is appropriate for you. Past returns not an accurate indicator of future returns. All right, so let's get rid of that, and let's have a look at the market. So, not too much going on at the moment, hey? Very steep.
We can actually finally say for the first time in, I don't know, a couple of months, 6 months or something, 7 months, that it's actually stuff is happening.
Stuff is happening, yeah, it's good. Ivan, do you want to start off with a bit of a run through on the market at the moment?
Aside from the massive fall off over the past couple of days, I'm not sure where to actually begin with. Overall, we were talking about the possibility of something like this happening for a while, and I don't remember if you were actually in that one with me, or whether it was with Tim, but we were talking about how in past, when markets have been making 52-week highs, you sort of see a lot of LITT longs pop up because your top 70 stocks are generally making new highs. And in the last couple of times when this was happening, it stopped being a situation. So, in fact, a lot of the rally was occurring from the lower cap stocks as opposed to the high. And typically that has been across most markets. Has always been a sense of divergence. In US, people look at the Russell index, compare that with the S&P index, and they see, where strength is coming from. In Australia, we don't really have that many indices, but you can see stuff like that from the strategy, from the trading scan screen in the strategy builder. So I thought that was quite interesting, and obviously, as it was happening, the trade wars had nothing to do with the rally coming from the small caps, but when things started spinning up, and why we opened so low yesterday, I think has a big reason to do with this, because there wasn't so much strength in the bigger stocks, and as they got sold off, the smaller stocks got sold off as well, and then suddenly you're sitting in quite bearish situations in some of these bigger stocks. So, Macquarie was probably, over the course of trade war, has been a good one to watch, because it's got such a close relationship with international markets. I've got a lot of exposure in China, a lot of exposure in US, and so on and so forth. So it's been interesting to observe that. Having said that, with where we stand today, for those of you that have been in LITT longs on the XJO, bless you. For those of you that have been in LITT longs on the XJO, we sent out a special note to the guys that have had them to hold off on any kind of adjustments, because what's actually happened yesterday has been an extremely rare occurrence. You don't typically get the market opening, 200 points below straight through a moving average. And what's typically a situation that we would have, we would have lapped up normally, because the market would have, orderly went through that level, unless sort of something crazy like that happens. We would have done quite well out of it. Having said that, the market gapped so low that it needs to stabilize and consolidate around here. And there's obviously every chance that this is going to continue going lower, that there's been, something broke in the market over the last week or so. There's been a fundamental shift in flow. But now we sit at this point where, you're effectively exposing yourself to a lot more risk. And sure, you may catch a lot more of the downside if it happens, but markets typically have a tendency to close their gaps, and that would have, that's a risk that occurs at the moment. How's that for a wrap up?
Yeah. So we can see the IV has really popped up as well,
and it's actually funny. It's not quite as high as you'd expect it to be. I haven't seen a down 200 morning. I'm pretty sure since the GFC. I literally don't remember the last time we had such a weak performance in the overnight. Even if you look at, this was the worst like Monday morning was the worst um, day in the US for this year. But even if you look at back, sort of towards the end of last year when we had those sell-offs and US had these big sell-offs, we were opening, 50, 60 points lower, not 220 that it was looking like it was going to open at 940. So yeah, so you think vol's going to pop up higher if we take out that low again.
But it just overall volatility has been so low.
Extremely low, yeah.
Yeah.
I mean, just look at it throughout the course of this year as well. It's just been, I remember, end of last year, especially as that sell-off was sort of accelerating. I mean, the amount of people that got caught on both directions was obscene. Obviously, if you look at, even looking at the chart now, you'd expect what happened in early 2019, and, I go back to that webcast, very webcast that I was filling and running at that point in time, saying, well, that's interesting. We've just broken through the 50-day moving average. Things are starting to look like they're turning, and they did, but no one expected it to go on and take out the high and then continue rallying like it did. It's it's actually an extremely bullish signal. And, in the past, these kind of scenarios didn't really occur quite as frequently as they do now. And it's almost like the entire fundamental way that the market trades is actually changed a fair bit over the past decade, as opposed to any other period in history.
Beautiful. All right, guys, while we're on the XJO, does anyone have any questions, or does anyone want us to go in and look at any particular trades that they might be in?
I think while people are coming up with some comments around that, I think one of the interesting things, and we'll talk about, I guess, iron condors in a little bit, but just going back to that LITT scenario yesterday, there's sort of two ways you can play it, and every now and then, once in a blue moon, you're going to get a big move in the opposite direction. It's just sort of a non-orderly repair scenario, and you've just got to analyze, this is where you go into the portfolio screen, run some stress tests, and just have a quick understanding of what are some different levels that the market can go, and just analyze how doing a repair may impact your portfolio. So that's probably the biggest amount of takeaway that you do. Normally, market trades through, close it below 50-day moving average, do your adjustment, and capitalize. But if you sort of have a 5% move away from the high in a very quick succession, it sort of brings back that elastic band comment.
Yeah. And with the volatility heading up, that sort of brings iron condors into play. What would you be looking for, or what will the system sort of see as a trigger point for iron condor for us to be ready to start looking at iron condors?
The most important thing is going to be IV rank, and if you go to the stock screener and sort by IV rank, that's sort of 1/5 of the weighting is towards is weighted towards the IV rank. So if you just sort descending on that, just do that for you. Are we both clicking? Anyway, yes, we are.
You go.
Okay, I'll do it. Okay, I think that worked. Okay, good. But you're looking a lot at this, and so if we looked at it maybe a week, 2 weeks ago, excuse me, a week, 2 weeks ago, there weren't a lot of stocks trading in that 90 plus IV rank range. I think that what we're going to find, if this correction does continue gaining momentum, you'll get a lot more pop up in sort of that higher 80s, 90s range. The most important thing is that our algorithm won't actually put a trade up no matter how good it's looking until we have a move, sort of an unfavorable move for an iron condor, if that sort of makes sense. So we expect a change in sort of the trend of the actual algorithm confidence value. So what that means for us is that the algorithm is going to sit there and wait for a couple of days and see how the market's trading. If it's going to start taking out lows again, volatility is going to pop up, IV rank's going to pop up, and some new stocks are going to go on and appear on that as soon as the market starts showing basic signs of consolidation, which makes it a pretty interesting time. Typically, when the market sells off, that's sort of the best time for a lot of these iron condors to come in, and that's where we'll see a lot more trading opportunities there. I think there's two that popped up today, if I'm not mistaken. If you go back to the, I'll just try and, there's a bit of a lag on the, on my mouse, by the way, just so you know. Okay, yeah, so there's two. There's a WPL that popped up and Ansel. So, you know, always keep an eye out on that. We've had, so far, so we launched the service in April. We've had, so it's been 8 trades that have popped up, hasn't it? We were looking at this yesterday.
Yep.
Yeah, 8 trades.
Do you want me to see if I've got that slide with those trades on it?
Yeah, it might be worthwhile, just because it's a pretty good breakdown. There's been one loser out of that, and everything else, if you took it on the first trade and you got filled around 10:30, every one of them has been profitable. We've done a bit of work with market makers now, so they're actually helping us get a lot of these trades filled. They've given us really good prices on the trades, well, very, very fair prices. We've got 3 guys competing against each other to give us the best price that they can, and for them, these are pretty good trades. On that one, by the way.
Yeah. Here we go.
Oh, there it is. Yep. There you go. Yep. So those are the numbers. So CTX was the only one that misperformed, and the only reason that missed, and it actually missed quite significantly, it was because Cortex came out and gave a profit downgrade where their profit was halved. So that caused a down 25% open, which unfortunately happened during that iron condor. The others, you know, 3 max profit, 2 half and 3/4 profit. We've got a couple on at the moment. They're doing okay in light of what the market's doing in particular. We've had a bunch of people in AGL. That's offside a little bit at the moment, but it's not sort of tragic. 20. There was a 20 put in there on the sold leg. It's trading sort of 30 cents off
Robert's
that.
actually asked, can you have a look at the AGL iron condor?
Sure. Yep.
Do
you want to bring up a chart?
Yeah.
So, yeah, look, AGL is a bit offside. At the moment, there's probably no reason to start panicking about it. AGL doesn't have an extremely strong correlation with the market. It's trading on its own at the moment. But you know, there's a fair bit of support down around here. I think that we'll see a little bit closer to today. It was funny. I was actually talking to Brock about this, who's the man behind the platform. And he's got this on and he goes, oh, this doesn't look like it's a trade that's going to go well. I think it's way too early to say. You know, $20 was a sold leg. We're not too far away from that at the moment. The only thing to keep in mind is got to go a little bit higher than that because there's a dividend that's due to come out just before the end of expiry. This expires, what are we, is it August or September expiry? August, yeah. So there's 3 weeks or so left, 3 weeks, 2.5 weeks left on that. So, yeah, so I think we'll probably be in a better position to talk about it next week. I would think, based on where it is at the moment, you know, we know statistically where we're selling our legs, half standard deviation out. there's every chance that it's going to go on breach on one side or the other. There's over a 30% chance that it's going to breach both sides.
Can I ask a question, because you've done a lot of the research on this, and in the instance where there's a bit of a shift in the market, you're in an iron condor, it sort of, is there any, any consideration to closing out early that you would give? So, for example, if this moved right back into the middle of the range next week, you can realise a profit at that point. Would you close out, or would you just simply say, well, this is still meets the rules, I'd stay in it and, just trade it out?
I haven't seen anything, to warrant either or, right? I think that, honestly, I hold on till last day. I was in the WPL that was a little bit offside. That actually was one of those that breached the top, or it actually bounced off the top range and then went down, and it breached the bottom. I ended up getting out at 3:30 or something out of that, and paid up a little bit to get rid of my sold put, which was the one that was the only leg of the money. But yeah, I'd hold on. The market is going to do what it's going to do, and we can't control that. But statistically, there's nothing, either suggesting that you should or shouldn't close out early. There's no correlation really. In fact, you would really want the market to, preferably, based on the stats, you feel almost a lot more comfortable if it goes and breaches one of the legs. So in this case, the 20 or the 22, and you kind of hope that it does its thing, whether it be to the upside or the downside, and then kind of snaps back. But I don't know. That's what I like about iron condors. You put them on and you generally don't worry, because on expiry day, you're either going to have to close some of it or you're not, right? That's pretty much what's going to happen with them.
Beautiful. All right. So, Robert, are you happy with that? Did you have any other questions regarding that AGL, Robert? Or just let us know. Just a quick poll. What are people's general mood about the market at the moment? If you just wanted to write bull, bear, or neither, no opinion, into the chat box, I'd just be interested. I'll run a little poll and give you the feedback.
It's almost not a bad time to run one of those polls that we ran towards the end of last year.
Yeah.
Yeah.
Yeah. Okay. True.
I like your answer, Michael. No opinion.
Yeah.
Yeah.
So the general mood is, not really sure, people. Okay.
Rob, in terms of, risk of being exercised, it's always going to, there's always a risk. In terms of, it sounds like you didn't close down the put, which is why you got exercised. The thing about trading on that last day, or even second last day to some extent, you will possibly have to pay up a little bit. Market makers don't really want to go in and take the risk on something being, at expiry price. So you do have to pay up a little bit. I think from memory, I paid something, I reckon it was about 3 or 4 cents up on what it was. But it wasn't sort of the end of the day. Oh, yeah, that's right. You were, so assignments occur rarely, generally, and sort of coming right into expiry season, it's close. Rob, I think that your WPL was also a little bit skewed. I think you got in on the second or third day. So you ended up having strikes that were a little bit higher. I think you were about 50 cents higher than what I had in my account. So yeah, you had that partial assignment on your sold, which obviously is never valuable.
Okay, is there any other questions? Does anyone want to discuss any other trades that have come up or anything that they're looking at? Happy to do that now. Otherwise, in a moment, we'll call the session to a halt for another week and be back next week to go through what has happened and what trades we're in at the moment and have another look at some of those iron condors that are open at the moment.
And hopefully we'll have a couple more pop up.
Add to this?
Yeah, I was just saying, hopefully, if the market does continue downwards and volatility drives up, would be the ideal scenario. And hopefully what will happen is we'll get a whole heap of iron condors on in the next week or two. It would probably be the best case scenario for us at the moment if volatility drives up significantly, market sell off a little bit more, and then sort of halt and try to find that ground again. So I'll see. It'll be interesting.
Yeah, absolutely. And so quite a few people, the poll came out with no real clear winner, but probably more people saying sideways, no opinion, and the like. So, if that's the case, then iron condors, will be something for you guys to have a look at in the coming days. Mix asked, do you require margin on both sides of the iron condor or just one side?
It's one side, yeah. But that margin changes depending on where the price is. So best way to look at an iron condor is look at the maximum loss of what that iron condor is and have that money in your account. That's going to be what you will require to have if it goes in one way or the other. But the way the margining system works is it actually looks at it on your entire portfolio basis, and it'll say, okay, well, what's the risk of stuff going up or down? And obviously the market can go up and down at the same time. So having an iron condor is usually, you get serious benefits as opposed to just a sold spread from a margining point of view.
Rick's asked, can your max margin exceed defined loss?
The answer to that is technically yes, because there's a margin multiplier. So it's, you pay a 1.2 times margin multiplier, which is, thanks to our clearer. So theoretically, it could do it, but if you're just running that one trade, have a bit of a buffer, but in reality, with everything else in your portfolio, you're probably going to have some stuff in all sorts of directions if you're trading relatively actively, and then what will happen is it'll all sort of offset each other.
Beautiful. All right. Any other questions before we call this session to a halt? Beautiful. All right, Ivan. Well, thanks, mate. I'll speak to you soon. Thank you to everyone for attending today. And if you've got any questions, call the office. Tim's on standby. Beautiful. Thanks, guys. Have a wonderful day. Cheers.
Thanks.